Morning, everybody. It's the 7th of March. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. You all right?
Yeah, happy Monday to you.
And to you.
A bit of a bloodbath again out there at the moment. Looking at some of these equity markets in particular, European stocks are getting hammered at the minute, and energy prices continue to move higher in a parabolic fashion, which we'll come on to shortly. Let's just rattle through some of the latest headlines to give us a bit of a clear picture about what is moving markets today. Clearly, it's surrounding the Ukraine-Russia situation. Ukraine remains under bombardment. Russian forces have continued to pound targets in Ukraine, but have not been able to take any significant cities during the weekend. Following peace talks last week, there were further efforts to secure the humanitarian corridors to allow civilians to leave, but casualties remained high as heavy shelling continued. I think they are going again with that today to try and get people out, but hopefully that is more successful than the one over the weekend. Ukraine continues to ask for the no-fly zone to be imposed over the countries. Western countries again rejecting this, but the US is considering the potential for Russian-built fighters based in Poland to be supplied to the country. In terms of what's going on with the energy prices as a result of all of this, the main economic focus has been on the surge in oil, on the further surge in oil prices and in global markets. There's been strong pressure for imports of Russian oil to be stopped, with the US administration increasing pressure for a ban on shipments. We saw oil hit 13-year highs yesterday this morning, over $135 per barrel. Equity markets are getting hammered. FTSE is down at 5-month lows. If we look at some of the other indices like the German market and the Euro Stoxx 50, they're also getting pretty battered. The euro as well continues to get hammered. The surge in energy prices has triggered further fears over the Eurozone outlook, with an important threat of stagflation. Markets are assuming that the ECB will not be in any position to tighten monetary policy, and the euro has been subjected to further sharp selling pressures, with a 22-month low being seen against the US dollar. We've also seen Euro Swiss dip below the parity number. The Swiss franc gained further support on Friday with renewed safe haven demand as the situation with Russia and Ukraine continues to rumble on. So plenty going on and some really big moves in markets. So Steve, I think we should get stuck into some charts. Anything that's catching your eye this morning? You know, obviously we're seeing some massive moves, so there's going to be something, but where are you going to start?
Yeah, tricky one, isn't it? Obviously, we'll start with indices. This is the downward correction has continued. Looking at the FTSE, we're looking at the weekly chart on FTSE. DAX. We had this supportive line, 14,810, which we mentioned. We've been mentioning for quite a while now. Obviously, broke it. Not last week, the week before, but last week we actually moved down to a 38.2% Fibonacci retracement level of the move from the low in the pandemic, where we moved. We got down to around about 8,000. The move up to just over 16,300. We're very close now to a 50% retracement of that, Joe. That's the sort of like next real level. You can see this sort of like we'll find some congestive support around here. But 11,350 and 11,150 for me are potential levels to achieve in a short space of time. As you've said, we're down nearly 5%, just under 5% now on since Friday's close. So quite a substantial move to the downside. The US markets obviously not impacted as much. DAX impacted because it is a European market, and that is naturally going to be impacted more. However, there should be a drag effect on the US indices, and we're seeing them down around about 1.5% in out of hours trading across the Dow, the Nasdaq, and the S&Ps. Key support levels where we are around now, 33,000. That's the level for the Dow. Below there, we did have a spike down a few weeks ago to 32,242. Reacted very aggressively higher from there, but it's giving up the gains now. On the Nasdaq, we got down to a 38% retracement a couple of weeks ago, and then reacted higher, formed a bullish hammer. That bullish hammer has now been I was going to say transgressed. Don't know if that's the right word to use, but it's been engulfed by last week's price action, and this is continuing. So really sort of like focusing on that 13,000 level as a level of support and a level of interest in the NASDAQ. Below there, we've got 12,200. I mean, we're sort of talking about these levels that on any normal sort of scenario, they're a long way away, but not in this type of market where it's very, very fluid and an ever-changing situation. We've got a support area around about 4,270 in S&Ps. That's actually trading just below it as we speak. This is the head and shoulders formation that we've drawn a few weeks ago. We did have a spike down to 4,113, but prices reacted higher, similar to NASDAQ and Dow. But now starting to give up those gains again. The China 50 at last has broken through the 14,500 level, a level which I've been sort of talking about for, it feels like years rather than months. But we closed below it last Friday. For me, this is a very, very bearish phase of the market we're entering now. And we've got the trend line support, which comes in around about 12,770. That's almost just under 2,000 points away. So yeah, for me, a clear break here. Maybe look for a retest of that 14,500 level. That could present a good risk reward selling opportunity. Going on to commodities. Don't really know what to say about oil. It's just
Relentless.
continuing. I know it is relentless. We are, if we compare it to all-time highs here, just under $150. Not far away from there. Today's price action in WTI crude oil, we got up to a high of 125. On the Brent side of things, as we've got a high of 128.60 on these charts. Obviously, Joe's mentioned 135. That could be either the sort of like the spot or another futures market that we're looking at. But yeah, we got this breakaway gap over the week as well. I would expect that to be filled because the volatility, any sort of what's deemed as positive news that comes out of the Ukraine-Russia situation, we could easily see this gap down. Like we saw last week, I think we were trading around about $112, $113, and within a couple of hours we were back down at 105 when there seemed to be a little bit of a reprieve. Let's hope for that to sort of like rear its head this morning or as soon as possible anyway. But yeah, natural gas as well also just continues to move higher. We've got up to last October, we got up to $6.50 natural gas when things were starting to sort of like bubble a little bit more aggressively. Had the big correction lower, 61.8% fib, acted as support, and now we're seeing the projection higher. I wouldn't be surprised to see this squeeze aggressively higher again if the conflict continues for much longer.
So on the gas front, Steve, so European gas, obviously, I don't know if we can get a chart up on that, but that's gone nuts again this morning. It's up 12%, I think I saw. European Euro gas futures.
Well, I mean, I don't know which market it would actually.
I mean, if you look at like the Dutch natural gas or the UK natural gas futures, you can see.
Yeah, I mean, this is
It's up 20%.
Yeah, I mean, look, this is a UK natural gas. Yeah, aggressively higher. We were sort of like we've been sort of like thinking about this for a while now. Everyone in the UK has been told that their gas bills, electricity bills, energy
I
bills.
don't think they knew they were going to be going up like that, though, did they?
No. And this is sort of like. So did someone else know this was going to happen? I don't know. It makes you wonder, doesn't it?
Yeah.
But yeah, so they're uncapped now, and so we're at the mercy of those. I think we've got a cold spell coming. Definitely across the UK on the back of this. People will just like walking around in jumpers and coats inside just to,
absolutely.
especially if we get any sort of cold snap. But yeah, I mean, that looks like
it's horrendous, isn't it?
I mean, that's like.
Can you click on the log scale? Does it make it easier to view? Just scroll it in. It doesn't make it look any prettier, does it?
Not at all. No. You've got this sort of like huge extension. This looks like a little bit of a correction here. So is that an end of a fifth wave? Are we going to go again? Who knows? Doesn't look too clever, does it?
No.
Let's get something that looks a little less scary, but it still is obviously safe haven asset. The gold driven on the back of the Russia-Ukraine situation. We hit $2,000 this morning. 2,075, the all-time high. That's within a short throw. Can't really see again unless there's some miraculous reprieve. Can't see this not getting to that level and testing it. 20,075. Our measured move target for the double bottom that was formed by the swing low from March and August last year. The measured move target for that is 21,500, around about there. So we've, I've been very bullish of gold for a long while now. 1677 seems to have been a pretty magic number, which held quite well. And then looks like we're having that move that we were expecting. Again, didn't really. I thought it'd be more of a dollar weakness than global conflict. So it seems to be based on that. If anything, for me, one of the markets to really look at would be gold silver. The ratio of gold silver normally holds in over sort of centuries, holds in pretty tight, but it's blown way out. That's, I mean, I can't really work out what the ratio is on that, Joe. I don't know if you can sort of like bring a magic chart up which shows it while I'm messing about here.
Probably.
But yeah, for me as well, we got a double bottom in silver. The neckline is at $25.40, so it's broken through. And yeah, no reason why that can't sort of continue higher. $30
Just
is
type in
within easy
gold
reach.
silver and it'll come up with the trading view price on it.
Yeah.
You're on futures, that's why. There we go.
Gold silver ratio. I mean, well, I suppose historically, I've always thought it was like naturally around about 80. So it isn't far away from its like historical average. I'm pretty sure it is around about 80 times, gold being 80 times the value of silver. I mean, we saw this huge spike higher in March 2020. That was obviously the pandemic. When the pandemic hit, we saw this huge move higher in gold, while silver sort of like languished about. But yeah, I suppose you've got an inverse head and shoulders formation there, Joe, maybe.
Yeah. Yep.
So yeah, for me personally, that feels like a fair trade. Silver, I think, is always pretty undervalued, but yeah, let's see how that pans out. Might have heard it here
Panning
first.
for gold.
Panning for gold, yeah, why not? Cryptos. So Bitcoin has taken a bit of a hit last week. We saw, let's go to the daily chart. We saw the sort of highs hit on the 2nd, just fell short of this resistance at 45,850. So like a decent sell-off during the whole week and under a little bit of pressure this morning. And everyone talks about, or a lot of people have been talking about how people expect Bitcoin to overtake gold as a safe haven. That's definitely not the case at the moment. Gold is flying. Bitcoin is being dragged by the indices. So definitely not a safe haven asset yet. So I'll say yet, just in case it turns into one at some point in the future. But we've been looking at the central bank digital currencies and thinking they are probably the sort of like the real Bitcoin challenge that it faces. So shorter term levels in Bitcoin, we can let's jump down to an hourly chart. Why not? Found resistance, as we say, around this 45,000 level. Should find support around about 36,400. Below there, we've got 32,680. Obviously, 28,800 is the key support level for me in this asset, and above 52,000 resistance. So that's not really a great deal of help, unfortunately, at the moment. Just sort of like, I suppose Bitcoin should follow the indices. So watch that space if you want some sort of guidance on it. think that's me, Joe.
Nice one, Steve. Good start to the week there. So, foreign exchange, dollar is roaring higher, as you can see here, trading within this bullish channel. Today, we have pushed higher again, up by over 0.5%, and rallying into the upper end of the bullish channel. Closing in on this $100 mark for the dollar index, and you wouldn't bet against it really at the minute. Really strong move, breakout to the upside above these resistance levels, and showing no real signs of slowing. We're also seeing some continued strength in some of the riskier currencies like Aussie and New Zealand dollar. Obviously, they're being pushed higher due to the links that they have with commodity prices. So mining and oil and gas, all these commodity prices are going through the roof, and that is obviously having a very strong impact on some of these Aussie and New Zealand dollar currencies. So this is Aussie versus Swiss franc. That's breaking higher through downtrend resistance quite substantially, up by over 1% today. Aussie yen, that's kind of range bound still at the minute, but approaching resistance at 85.80. If we look at Aussie US dollar, that's completed what looks to be a double bottom here, but rallying into downtrend resistance here and a 78.6% fib level. So maybe an opportunity for some fading of that, given how strong that move from the lows has been. If we take a look at euro, really sad story here. I mean, I've got 12 consecutive down days on here, but it's probably more than that now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 consecutive down days for the euro versus the Aussie dollar. Absolutely smashed to pieces. Sadly, and that kind of trend, if you were sort of selling up in and around there, you don't get many moves like that from a risk reward perspective. If you're still short, that's an absolutely amazing trader once in a year, maybe even longer. Looking at euro CAD, similar situation, breaking down through support at 141.00. Euro Swiss, as we talked about on the headlines, that had reached the parity levels and actually gone below it at 1 for 1. Euro sterling, that's broken down to new lows, although posting a bit of a reversal as things stand at the moment. Maybe a bit of an indication that we've had enough selling on that for the time being, and we're going to see a little bit of a recovery. That's a really powerful looking reversal, but it is very early in the session.
Yeah.
Euro yen, again, just anything euro linked just looks absolutely horrible at the minute. So finishing off with euro US dollar, that's smashed through all these support levels. We're now down at an 88.6% fib level of this entire move here, from the lows of the pandemic to the highs that we posted in January 2021. The 88.6, if you're sort of diving around in that bucket looking for that to act as support, that really is kind of last chance for a move to work out. So it seems to be holding for now, but you wouldn't bet against further declines towards these lows that we posted in March last year. Really does look pretty horrible at the minute. If we look at cable, that's back down at key support here from the lows that we posted in December last year. The 78.6 was doing a bit of a job as support, but has since given way. And if we get below this support level here, then I think we'll be eyeing up this 50% fib level down here of this entire up move again, from the lows of the pandemic to the highs that we posted in February last year. So that 50% looks to be the next target if this support level here gives way. So it really doesn't look good for many currencies at the minute. And because of how persistent these moves lower have been, it is sort of catching falling knife territory at the minute. So if you are trying to play these things, you might luck out and get a bit of a bounce, but I'd prefer to see some steadier price action to consider playing some of these currencies for now. So that'll do on that front. Steve, you got something to say on the new sentiment side of things?
Yeah, just really interesting on the news sentiment. This is obviously Acuity, our parent company, and they produce market alerts, which on the crude oil, I just thought I'd take a quick look at it. And this goes back a month, this chart here, where you can see sentiment towards oil was moving low and is negative over the last month. During this period, it's produced 4 market alerts, It's where it sees patterns in the news sentiment and produces a trade idea based on that news sentiment. It gives you a confidence factor, and here you can see we've got 2 sell market alerts and 2 buy ones. Obviously, the main difference that jumps out is the confidence factor in the buy trade alert. So 25 days ago, we had a buy market alert which predicted that in historically daily news sentiment is moving higher, and 90% of the last 10 occurrences, so 9 out of 10 times, price has risen within 9 days, and obviously that has continued. We haven't had any market alerts during this period, sort of mid-month period. However, yesterday, with the obviously the markets closed yesterday, but it was taking Friday's closes at 118.10. It gave 100% confidence. I haven't seen many of those 100% ones, and
it worked.
And it worked. I mean, obviously, and it worked. I mean, it's had a huge jump. So it's sort of like come through one day ago. 100% of the last 10 occurrences where we've seen news sentiment moving higher in the manner it has, prices moved higher, and you can see news sentiment overall is still negative. So you know, but you can see that we've moved higher from the start of the month. From the 2nd of March, we've moved higher, so it is improving. You can see on this this daily chart, it has improved over the last 24 hours as well. This is a 7-day EMA of the news sentiment. So yeah, pretty positive from the news sentiment side of things for oil. More upside to be seen.
Cool. Okay. So gun to the head trades from Friday. Despite your bullishness on oil, there you actually went short of it on Friday, which didn't work out too well.
No.
We did have a win on FTSE though, of 1.53R. That actually would have gone on to hit target if we held them over a longer period, but we don't. So yeah, obviously they are getting pretty smashed. Although FTSE's having a little bit of a fight back now, and certainly performing better than some of the European markets at the minute. So Steve, what are you fancying today? There was some trade from last week, by the way, on the FTSE. That was midnight yesterday, though. Today, sorry.
I mean, I suppose if you look at FTSE, it has bounced off this previous support level. Does it have the legs to continue higher, though? You're seeing all DAX pull back as well, so maybe there's a little bit of interest on the short-term basis in buying these indices, but it would be very short-term, and you'd need a very tight stop. So I wouldn't get too massively carried. Let me get an hourly chart on here. How does that look on the hourly chart? Yeah, nice little sort of turnaround. This is the overnight market, obviously a bullish morning star formation here. We've seen the volatility over the 8 o'clock where we saw prices move higher. Yeah, I don't know, Joe. Gun to head, I'm a little bit mixed, really. I think with the oil influence, FTSE's got a slightly better chance. Well, should outperform the rest of its European counterparts. But yeah, I can't bring myself to actually buy the indices, so I've got to look further afield. Obviously, with the gap open overnight, I would expect this oil to fill that gap at some point, but there's no sort of like definite idea on when. And with the new sentiment obviously looking very positive for oil, really should be maybe even buying this breakaway gap. Gold hanging around the $2,000 level, big psychological level. Tempted to sort of fade that because I like to trade contrary to the market, which is a high risk way of trading. Joe, have you got anything? Can you go first or not? Are you struggling as much as me? Are you?
Yeah, I mean everything's just gone so parabolic in one direction that the only value that we can find is fading these moves, which
I meant to
contrary
say
to what we do as analysts, we probably shouldn't be doing. But
yeah, wheat futures. We did some analysis on wheat futures back in October, November, and we were talking about these levels, 947. It's just absolutely smashed through it. Wheat futures heading towards all-time highs, which we saw all the way back in 2008, $1,350, closing in on that quite aggressively. So yeah, again, pretty distracted by all this, Joe. For me, it's a bit of a flip of a coin. So in an ideal world, I wouldn't be trading this. I'd be standing aside waiting for some opportunity, waiting to see some sort of formations form or some reversals form. So
we've got to do something, Steve. This gun's going to go off pretty soon if we don't. So
okay, the only thing I can do is buy FTSE then.
okay.
Sorry, if the gun's going to go off, I've got to do something, mate. Let's get it here. Buying FTSE at 68.66.5. I'll have the stop. I'll have a 75-point stop. No, that's too much, mate. I'll have a 3-to-1 risk reward on a rally higher. That just feels like I'm throwing. Let's make this stop a bit further, actually. What's the low there? Low of that candle is 67.84.5. We need a 100-point stop at least in FTSE. Let's try and go for 2.5-to-1 risk reward, 71.16 I'm targeting. That's me.
Cool. Good luck.
Yeah, need it for that.
I'm going to take a look at Euro Sterling. So as I just mentioned on the intraday, from a daily perspective, it's had a really sort of decent turnaround, but it's still very early in the session. So clearly the pressure is on the downside, and I'm going to try and fade into this bounce that we've seen this morning. Looking at it on the hourly chart, it's rallied into downtrend resistance in the very short term, posting a bit of red now, failing to get above this level here. So I'm going to sell at 82.46, stop loss at 82.67, targeting a move back down to these lows that we posted earlier this morning at 1 a.m. at 82.02. So a really small 2.1R return is what I'm looking for on that, which is kind of the minimum that we would look for. So that will do for today, just sort of trading in line with that trend and taking advantage of the bit of a bounce that we've seen this morning.
Good luck with that, mate.
Yeah, cheers. Okay, data-wise today at 9:30 UK time, we have Eurozone Centix investor confidence. I don't think that'll be particularly market moving, given that we've got plenty of other stuff going on. But this week we do have some key economic events. We've got the ECB policy meeting on the 10th. We've also got US consumer prices on the 10th as well. And on the 11th, we've got the Canada employment report to keep an eye out for. But of course, the headlines with Russia and Ukraine are going to continue to dominate. That's pretty much it from us, I think, Steve. A longer one today to start the week. Hopefully that's been useful for anyone that's watched. And we'll be back tomorrow morning with a follow-up on it all.
All right. Cheers, Joe.
Have a good day.